Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on natural gas, awesome continuation for the bears with the gap down through the double bottom of support of $3 and just more lower highs and lower lows. So we can get rid of this uptrend support line. We can draw a new downtrend resistance line with this steep pullback. Hitting that high and hitting the lower highs. Would put it right there for a very steep downtrend. Doesn't mean much if it breaks, just something visually to keep an eye on. And it's always going to be the price action that I want to see breaking for a change in the trend. So I'm looking very closely at 2994, the high we saw on this bounce attempt. And that level has to break. We have to begin filling this gap in order to change the trend. So it is time to start looking in the opposite direction, in my opinion, for a short-term bounce. Now, the daily time frame, the pattern we've been watching has been lower highs and lower lows very clearly, but we're a bit extended to the downside. So after 3 red days in a row, we are looking for short-term upside, and that is because of shorter-term time frames. The hourly RSI down in the mid-20s, trying to see a bounce, but I'm more concerned with the 4-hour chart, looking for this bounce to play out. So the RSI is down at about 27, and we can see in the past month and a half, the RSI has not stayed below 30 for very long. It did right to start 2017. It did stay under 30 for a pretty extended period of time. But because we're under 30, in my opinion, it's time to start looking for a bullish reversal candlestick and confirmation of that bullish reversal candlestick. So we do have one forming right now, not a very strong and convincing one, but overnight, that's what I'm going to be looking at. And first thing when I wake up tomorrow morning, I'm going to check out the 4-hour chart of natural gas and see if we get that bullish reversal confirmation, see if we're close to a bullish MACD cross, and we'll be looking for a short-term bounce. Our target will be a gap fill. We'll be looking at 3031, and then the next resistance after that would be 3057. So if you are in a bearish trade still, there's nothing you can do overnight, but there's nothing to worry about. I don't think it's going to be a significant bull break to the upside, a huge move, but it's definitely, like I said, it's time to start looking in the other direction for a bit more sustained bounce. So on the daily time frame, last time we saw a little 2 days of green, and we saw 3 days of green, and now I'm going to be looking for a day or 2 of green again as we head into the inventory report. We'll be watching very closely. We're not getting much signal in terms of the bulls showing up just yet, but it's just something I'm keeping an eye out for those reasons. So a second gap down, open on UNG, a close at the low of the day, and here we are hitting key support. We must hold 720. That's the low from back in November. And looking on the weekly time frame, we actually got all the way down to 685. So 720 and 685 supports. The bulls must form a higher low compared to 685, or that is going to be a big time setback for the bulls on the longer term trend that's been playing out pretty much all of 2016. So we had that big significant pullback, established support. And if we can't form that higher low on this pullback, the bulls are in trouble. So that is the key levels to be watching on UNG, 720 and 685. And for the bulls to break the lower high pattern, they're going to have to get over 796, which is a long way away, about 8 to 9% from where we currently stand. So we'll see what happens overnight. We'll see what the setup is heading into tomorrow morning. And we'll check back in tomorrow to see if we get that bullish reversal candlestick on the daily. I certainly think it's more likely that we do than not. I'll see you then. Thanks for watching.